A slew of block deals on our radar. Asian Paints trades higher after shares worth 7,700 crore rupees change hands, while Eternal trades marginally lower after a block deal. MapMy India, on the other hand, falls over 7% as 28 lakh shares change hands. Sources say PhonePe likely seller.
Shares of Oil India and ONGC rise on the back of surging crude oil prices amid escalating West Asia tensions. Brent crude prices hovers around $70 per barrel mark, hitting the highest levels we've seen in the last 2 months.
And Paytm falls as much as 10% following the Finance Ministry's clarification on reports about possible introduction of a merchant discount rate on UPI transactions.
Shares of Sterlite Tech rise over 10% after signing a JV with Dilip Bilkon for a 2,630 crore rupee agreement with BSNL for the BharatNet Middle Mile network in Jammu and Kashmir and Ladakh telecom circles. Hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, and today we have Vinny who joins us on the show. Vinny, good to have you on the show. In fact, the markets today are a little bit subdued, but I think par for the course. Pockets of the market continue to do well. Overnight, the geopolitical tensions come back to the fore. So let's see how things pan out from here on. But good to have you on the show, as I said.
It's great to be here as well, and great to always anchor with you as well, Nigel. But interesting day. There's obviously expiry that we watch out for today as well. Like you mentioned, geopolitical tensions is something to watch out for. Updates on that front. But interestingly, a lot of block deals that are keeping the stock abuzz as well, right? In the recent times, earnings season is over, but block deal season seems to have just started right now for the markets.
Well, that's right, and I think we'll have our hands full. Going by the pipeline, the information that I'm picking up as well. I'm expecting a couple of more large fundraising and large kind of block trades to take place in the next 1 week or so. That's it. Let's get a call in the markets. Since we're down a little bit in today's trading session, 40-45 points or thereabouts, let's welcome Sachidanand Utekar of Trade Bulls for a technical check on the markets. Sachi, what is your analysis in terms of the kind of move that we have seen? The Nifty seems to be consolidating. Buy the dips, sell at the higher end seems to be what the traders are working with. But would you buy this dip? And if yes, what is the crucial level on the downside that you will not want to be breached? Sachi, we will want to hear you.
Good morning, Nigel.
Yeah, please.
I think the range is clearly defined here. 25,000, 25,050 has been a very strong, demand zone. But on the higher side, Nifty is failing to establish a close above that 25,180, 25,200 mark. But if you look at the placement of the ADX, it is about to break that 25 level, which will be a good sign of trend strength and momentum. So I think this is a very good, healthy consolidation that we have witnessed on the Nifty. For the past 4 trading sessions, it has been holding itself above its 5-day exponential moving average well. So I think buying the dips is always a healthy, strategy. Even for the day, I think it's better to accumulate Nifty near to that 25,050 mark. On the higher side, from an expiry perspective, we don't expect the markets to breach that resistance of 25,200 today. But eventually, going forward, we are expecting that the rally could continue towards 25,555. So I think for the day, 25,160, 140 would be an ideal zone wherein we may see the expiry getting shaped up, but I think on a decline, 25,050 remains as a very strong support and a demand zone.
Hi, Sachidanand. Good morning. I just want to talk about some of these volume movers today, right? We have high volumes coming in for Tanla platforms. There is a news flow there as well. There's LG Equipments, also CE Infosystems. It's down 8%. Obviously, we have that block deal. But anything on the charts and technicals that you're looking out for on any of these stocks?
Good morning, Vinny. I really don't track these stocks on a day-to-day basis. But if you look at the price action of Tanla, we have already seen a good surge in this particular stock in the last couple of weeks. The main headroom is available right up to 760, 770 kind of a zone. The way the stock had breached from a rounding bottom consolidation formation a couple of weeks back. So probably we may see an extended move towards 750, 740 kind of a zone. So in case if someone is long in this particular counter, then I think it's better to retain their long position with a stop loss at 630 and review their position somewhere close to around 750.
Right. And any other stocks that you're looking at today on the technical front, or one should keep an eye out on given its expiry day as well?
Well, Vinny, there are two stock ideas which are on our radar, which we have also communicated to our clients. The first one being Bajaj Finserv. If you look at the overall structure, the stock has been, consolidating within that range of around 2,000 on the lower side and 2,050 on the higher side. But if you look at the way its RSI has given a breakout above that 50 level, we may see a good strong rally unfolding here. We are expecting, immediate momentum towards 2084 levels. So that's why we are recommending building fresh long positions here, keeping a stop loss at around 2010 on closing basis. The other stock on our radar has been Apollo Hospital. Even on this particular price chart, for the last 4 weeks, we have seen a good, healthy consolidation. The 7,000 mark was very significant. Call writers were very adamant here. But looking at the way the price is unfolding here, long positions are being established. We are expecting that this particular rally may continue towards 7240 because of short covering. The stop loss for the trade can be placed at around 6970 on closing basis.
Okay, all right, Sachi, thanks a lot for joining in and giving us a call on a couple of those stocks. But let's turn our attention to our special segment where we get you a few ideas for profit from Money Control Pro. Anubhav Sahu of moneycontrol.com joins us to talk about a stock that he's tracking very, very closely. Anubhav, over to you.
Well, talking about HEG, which is well positioned to benefit from upcoming steel manufacturing demand, particularly in the US, as well as the industry-wide consolidation. Now, graphite electrode manufacturing capacity, ex of China and Russia, has shrunk by almost 20% in the last 2 years. Now, this has been on account of closures announced by peers like Resonac, Tokai Carbon, and Graphtec. Now, while the capacity reduction would help stabilize the near-term demand-supply dynamics and ease margin pressures for the industry, HEG is anyways outperforming due to its operational efficiency. Now, in the quarter gone by, HEG's capacity utilization was 80% compared to peers, which has been operating in the range of 55% to 65%. Now, in addition, medium-term demand outlook is also forming up. Globally, about 100 million tons of new electric arc furnaces capacities are under construction. Now, this translates into additional graphite electrode demand of about 180k ton, amounting to 30% of current global capacity. Further, Trump 2 policies are creating new impetus for the steel industry, resulting in new EAF capacities. Now, HEG is better placed to cater to the upcoming demand given its spare capacity as well as its stake in the US-based Graphtec, which is backward integrated. Further, even after recent run-up, valuations are reasonable in our opinion.
Thank you so much for that, Anubhav. But on that note, we're going to sip into a very short break. And as we sip into the break, we have some exciting news for you all. CNBC-TV18 Access is a premium membership based on service available on CNBC-TV18.com. It offers members exclusive content, market intelligence, and expert thought leadership. The membership includes access to CNBC-TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and masterclasses that are there, and curated lifestyle benefits as well. Designed for an immersive and enriching experience, it empowers members with premium business intelligence and unique lifestyle benefits, the power of insight, the privilege of access, exclusivity, experience, and influence. Yours to claim. Become a member. Log on to CNBC-TV18.com. Access plans. Welcome to Chartbusters on CNBC-TV18. And looking at the market right now, we've seen a bit of a further fall coming in the last few minutes as well. 25,050 around that mark is what the Nifty is trading at day's lowest point. So when we started the show, it was 25,100 levels. So a bit of a 50-point fall that we're seeing in the last few minutes. So let's keep an eye out on where that's going to be headed in the through the day as well, so that'll be important to track. But two stocks that we're keeping on our radar today, we have Sterlite Tech that is gaining on the back of an agreement that they've signed with BSNL, and the other one is Tanla Platforms, as the board is considering or will be considering share buyback. Rima is joining in with us to give us more details on this one. Morning, Rima.
Good morning. Let me start with Tanla, where the board meet is scheduled on the 16th to consider a buyback. The cash in the books as of FY25 end, that's March, is about 1,009 crore. The company in the recent past has done two buybacks. The last one was a period between December 2022 to January 2023, and it was for about 170 crore rupees. The stock price in the last 3 months has done well. It's moved up more than 50%, but over the last 3 years, the stock is corrected by nearly 45%. Now, Sterlite Tech is the other big mover in the mid-cap space, where the company's demerged arm, Global Services Business, has signed an MOU with BSNL via a joint venture with Dilip Buildcon, and the total order value is 2,631 crore rupees. But remember, this order has been won by the demerged arm of Sterlite Tech. The formalities of the demerger have been completed, and this new entity, Global Business, will get listed according to the company Sterlite Tech in Q1 of FY26. So it's not going to directly boost Sterlite's existing order book, but indirectly, because it has about a 44% stake in this demerged entity, Sterlite Tech also benefits. Back to you.
Okay, Rima, thank you so much for that. But some updates for our viewers as we submit the break. Stay updated on your favorite stocks with Money Control Super Pro. Receive a real-time alerts with AI stock update features of Super Pro and get insights on key corporate announcements on stocks of your choice for a quick decision making. Get your investment superpower today. Subscribe now to Money Control Super Pro.
Welcome back. Well, keep an eye out on a few stocks actually from the broader market. Sterling and Wilson, I think that's a stock that's calling for attention. It's up close to around 7%. Majority of that move has come just in this hour itself. So that is one stock. Nava Limited, that's another stock that's moving on very, very high volumes. I think we should pull the intraday chart on that one as well up. And Tilaknagar Industries saying cheers all the way. That's up close to around 8% in the market. That's actually quite wobbly. So I think Tilaknagar Industries should come up for you. Just one more stock. Paytm, the day's low actually has got protected. From the lows of the day, it's recovered close to around 4%. So Paytm is a stock that I'll keep an eye out on. The low of the day is around 865 rupees. I think that level needs to hold out for the stock to build on to these gains. So we'll keep an eye out on that counter as well. But let's turn our attention to the defense space, and India could collaborate with Russia as it aims to plug gaps in its fighter jet fleet. Government sources say the government is actively considering Russia's Su-57 fighters. Parikshit Luthra, he joins in to fill us in on that scoop that he's picking up. Parikshit?
The Indian government is deploying a three-pronged strategy to meet gaps in its fighter jet program. This after Air Chief AP Singh recently said that India needs at least 35 to 40 fighters per year. The Defence Ministry had announced a new execution model for the fifth-generation fighter program 2 weeks ago, and this was to encourage participation of foreign and domestic private companies and provide them a level playing field with Indian PSUs like HAL. Sources tell us that the government is set to issue a request for proposal for the AMCA program next week, and this will be followed by the first pre-bid meeting with the industry in 15 days. The government may then invite bids in 45 days, so they're moving on this quite fast. As the development of an advanced medium combat aircraft or a fifth-generation fighter has a long development period, the government is also looking at ways to meet immediate needs of the Air Force for a fifth-generation fighter. Now, the Russian government has submitted a proposal to the Indian Air Force to supply and make Su-57 fighter jets. The government is now considering this proposal actively to see if Su-57 fighters can be acquired in a flyaway condition from Russia in the short term and also made in India. The reason why this is under consideration is because HAL or Hindustan Aeronautics Limited already has a Su-30 production line in Nasik, and we have a long-standing collaboration on fighter jets with Russia. Thirdly, the government is looking at ways to develop and manufacture fifth-generation fighter jet engines in India. Proposals have been received from Safran and Rolls-Royce, And these are the only two companies willing to provide 100% technology transfer and intellectual property. No plans as of now to acquire F-35s from the United States, and there is no proposal in front of the ministry either. When it comes to boosting air defense, this is a priority area, and the government is thinking about ordering perhaps 1 or 2 more units beyond the existing order from Russia for the S-400. Now, Russia has already delivered 3 squadrons of the S-400, and 2 more will be delivered by 2026. When it comes to quick reaction surface-to-air missiles systems for the Army, the Defence Acquisition Council could soon take up a proposal for this acquisition, and the total cost of this would be around 30,000 crore rupees.
Thank you so much for that, Parikshit. But with that, we're absolutely out of time on this edition of Chartbusters on CNBC TV18, leaving the Nifty at 25,050 levels. With that, we'll wind down the edition. Thank you so much from Nigel, myself, as well as the team who put this show together. But don't go anywhere. Up next, you have Trading Hour to take you through all the market action.